Hey, what's up, guys? Welcome to Homebuyer University live with David Rodriguez, credit expert, the Phenix Group, and myself, James J. What's up, David? How are you?
Doing well, man. Doing well.
Hey, man,
Surviving Monday.
I am excited to do this. So, we are going to provide some valuable information over the upcoming months and however long we continue to do this. But I love doing this type of stuff, um, going live, being able to answer questions. So if you guys have questions, put them in the. You can message us, send me a DM, or just send your message across the screen. David and I will answer your question. But while we get into the start of this, we're just going to kind of get into some things that people can do to help themselves out credit wise. We're in a super competitive market to say the least. And we're going to talk a little credit. But if you guys have questions for myself, you got mortgage questions, real estate questions, credit questions, reach out. I'm going to pull up the comments here, David, so we can make sure that people are able to reach us. So, but yeah, so we're going to start doing this, guys. David and I will be on twice a month. First and third is the plan to do this first and third Mondays of each month, from 6 to 7 p.m. unless something else comes up and we need to go more often, David. So,
That's right.
um, so yeah, so we're going to get into this. Things are going to be fine, David.
We're gonna make it.
This is what makes life so awesome, right? Whatever happens, happens.
Yep.
So, again,
Tornado warnings or not, we're here to talk about buying houses.
oh my
We'll,
gosh,
we'll
man. So,
we'll cover home warranty and home insurance and all that as well.
absolutely. Home warranty, home insurance. We're gonna make. We know we're probably gonna get somebody on in one of these upcoming shows to get on and answer questions about home insurance and home warranty as well. So,
That's right.
um, but again, if you guys have questions, shoot us a message and we'll get your question answered. And then during the show, also, David, as I get questions and as you get questions during the week, we'll probably just answer the questions on the show.
Absolutely.
So, but yeah, we are live. So let's talk a little bit, man. Let's talk credit because again, we're in to say it's competitive is an understatement right now. And so
Mhm.
for people that might be looking to um, purchase a home, as we're about to really get into what we would consider the season. You know, we're heading to the end of March and through the start of April here in the next 10 days. Oh my God, it's going to be April in
Mhm.
10 days at this point.
Yep.
So we want to get people prepared for that and some things that they might be able to do credit wise, to prepare themselves for this market because you and I know if you're not ready, you can't be working on your credit. Why you need
Mhm.
to have your stuff in order now.
Mhm.
So maybe we can give people maybe three things that maybe they can do right now to prepare
Absolutely.
themselves,
Mhm.
and then maybe we can talk about some of the maybe myths of credit and credit restoration, credit repair. But let's just start with maybe like three things that maybe somebody can do right now if they're preparing themselves to own a home in 2022.
For sure, man. And James, obviously, super excited as well. Thanks for inviting me to do this.
Absolutely.
I think that this has the potential to blow up, and
Yep.
and as James mentioned, we want to bring some very high level information. Hopefully, we can touch on some things that you haven't heard before. Really, inspire some thought.
Yep.
And try to obviously be here as a resource to get your questions answered. And I'm
Yep.
glad you brought up the three things, right? Um, this is something that I've always told people. If you think that you want to buy a house, go talk to a lender.
Yes.
I mean, what are you waiting on? Talk to a lender because even if you're 3 months, 6 months, a year out, we need to know where you stand. And
Yes.
there's nothing wrong with going and having that lender do that pre-approval. Let's see
Yep.
where you're going to be. So now people don't want to do the inquiry, and I get that, but we've got to know. Uh,
Yeah.
and
Hey, Dave, real quick. So touch on
mm,
this inquiry because this comes up a lot. I'm
mhm,
glad you said this. Let's address this right now. So an inquiry from a mortgage lender, and what Dave is talking about is guys, you have these credit companies or credit monitoring companies. You guys know some of the ones that we're probably talking about, but their algorithm, all that stuff is not the same as a mortgage credit score, right? So for people that say my score is blank or whatever it is, and our first thing I ask is where did they get the score from? If it's your bank, if it's one of these services that will remain nameless at least for right now, but you need to know from a mortgage perspective. So I want you to break this down so people understand the difference between a mortgage credit score versus any other really credit score. Because I think, and correct me if I'm wrong, David, there's really no other purchase that most people are going to make that requires 3 credit bureaus to be pulled.
Not necessarily. You're right. Now, that being said, a finance company has the right to pick whatever they want.
Right.
They can pull a credit. If they want to look at all 3, they can look at all 3.
Yep.
But for the most part, depending on what you're trying to get financed for, you're going to have a different score. Many different FICO models. If you ever see Vantage 3.0 or even FICO 8, that's not necessarily something that a lender is going to use.
Yes.
There are some exceptions to that rule. For FICO 8, there are no exceptions to that rule for Vantage. There is no one that uses the Vantage score, period.
Yeah.
I've been doing this 11 years now. And so I have not found any finance company or any industry that'll do a pre-approval or an approval based on a Vantage score. So obviously you want to know which one you're looking at.
For sure.
For a mortgage, they are going to pull all 3 bureaus. We've got 3 bureaus out there: Equifax, Experian, TransUnion. They own your scores. These are private, out-for-profit companies, and they dictate your buying power.
Yep.
So obviously, we're honing in on mortgage here, and you want to make and James could touch on this as well. When he pulls your credit, he's going to look at all 3 scores, and you're going to have a different FICO model for each one of those bureaus.
Yep.
For mortgage, it's Experian is a FICO 2, Equifax a FICO 5, TransUnion is a FICO 4. Yep. So and I'll level with you, it's very difficult for an individual to find those because some of these nameless entities that we're talking
we can name them
that we're not talking about, right?
If you want to name them, you can name them.
Well, it rhymes with shredded shawarma, so you got to look at it this way. If you want the good stuff, you're going to have to pay for it.
Yes.
Right. I mean, these credit reports, they're not free to James. They're not free to a lender. They're $35 to $50 a piece.
Yep.
And there's a reason that they charge for that, because again, if you want the good stuff, you're going to have to pay for it. Correct. Now, as I mentioned, if you have any thought that you want to become a homeowner, go talk to a lender. Now, if you don't want to go that route, then you need to find out if you feel that you got some issues on your credit, then you need to review a credit report. There's many different out there that are legitimate. And for the most part, if you have questions about your score or the content on your credit report, then I would recommend, getting a good, legitimate monitoring service. One of my favorite is Experian.com.
Right.
It's very thorough. With the paid membership, here's a plug for them, right? It gives you all the FICO 8s, which is a decent starting point. There's no rhyme or reason to how it's not off by 20 points or anything like that. That math doesn't work. But it does give you very thorough content, which matters. Like for me, when I do an analysis for somebody, they're talking about their score. Oh, I'm in the 500s or this or that. I don't care. I don't care about the score. I need to see the content, because the content is what matters. Yep. And it's a way that you can review your reports. If you're a dead set on finding what your scores are, then you're going to have to pay about $30-$40 for that from myfico.com.
Right.
It is the only one that shows every FICO model on all 3 bureaus. It's very good, but it's also overkill for somebody that is. I'll pay for my FICO.
Yeah.
Right before I go and apply for something. I want to know exactly, right? If, I bought a car not that long ago, a couple of weeks ago, as a matter of fact. And before I did, I was like, okay, these are the dealerships I'm thinking about. I know what finance companies they use. I also know what my credit union wants. So let me go and look. And it turned out, typically I would go with my credit union.
Right.
But my score just happened to be highest on one that the dealership used. So I said, you know what, I'll go with the dealership financing through that, and it worked out great.
Now, you mentioned this before, David. So I know you,
Mhm.
and I want to make sure we address this because before you had
Sure.
mentioned you can find out what bureau a specific car dealership typically would use, because normally it's one or the other for the most part. Again, they're not pulling all three bureaus. So unlike a mortgage for us as a lender, we pull all three. We're going to use the middle score, whatever that score is. Doesn't matter if it's Equifax, TransUnion, Experian. It doesn't matter to us, right? But you had mentioned if someone is looking for like a car, let's use a car for example, you can actually just call them and find out, hey, who do you guys use, right?
Absolutely.
So you can address that if there's something specifically on that one bureau, whether it's TransUnion, Equifax, or Experian. You kind of know what might be coming if you know, okay, they're going to use Experian or Equifax or whatever the case may be.
Prior proper planning prevents poor performance. Right?
Say that again.
Prior proper planning prevents poor performance.
Love it. I just making sure
Um,
you were good. Okay.
yeah. So
Very good.
and I mean, and it's not just for cars.
True.
If you want a personal loan through your bank,
Absolutely. Yep.
if you want credit cards, call them up, figure it
Yep.
out. But again, homes, it's always going to be the same. And when James says he's looking at a middle score, it is literally the one in the middle. It's not an average.
No.
A lot of people think
Really not.
that it's not an average score. It's literally the one that you throw out, the one that's on the bottom, you throw
Yep.
out your lowest and your highest, the one that's left. That is your score that he's going to base a pre-approval off
That's
of.
right. Yep.
So full circle, right? Step one, if you got any idea you want to buy a house, go talk to a lender.
Yep.
If that's not an option, then you need to review a credit report. Gave you a couple of different places you can do that.
Yep.
Now, another thing is, before you jump out there, I mean, let's face the music. Homes are not cheap right now, and they're
No.
probably never going to be again. And there is a thing, credit score doesn't dictate how much you qualify for. Your debt
Yes.
does, your debt to income. How much
Absolutely.
money you got coming in versus how much are your bills going out.
Yep.
And so you want to make sure that you are eliminating as much extra debt as possible. And what I mean by that, I want to dive into this because I get a lot of people asking me, well, I owe, 3, 4, 5 grand left on my vehicle. I want to get
Right.
rid of that payment. It's like $500 a month. Should I go ahead and pay it off? No, you shouldn't. Maintain that payment, because the damage that can come to your credit score by paying off that vehicle is
Yes.
going to be way worse than, saving that money.
Yeah. And you know what? I know people mean well, right? They
Yeah,
mean
absolutely.
well. Same thing, and you can. I'll let you finish your point, but you
Sure.
can talk about this too, because people will pay off collection accounts, right? And they mean well, but
And shame on you for being a good person.
right. Unfortunately, when you do that, sometimes it can actually be a detriment to your score when you're doing this. And again, you're trying to do the right thing. So,
Hmm.
but yeah, you're 100% right. I get the same thing when people want to pay off a debt, not necessarily a collection, but a collection or just a regular debt that they're paying on it, and how that impacts their
Sure.
credit score. So I'll let you
And
finish that
yeah,
out.
and to be very specific, credit card debt,
Yes.
right? If you're unable to knock out your credit card debt, well, I'm not going to sugarcoat this. You may not be in a position to be a homeowner right now.
Right.
We need the ducks in the row.
Yep.
Let's go ahead and knock out that debt, because if you've got a minimum payment of $250 a month on a credit card,
Yep.
well, when James looks at your credit, that's a $250 payment he's got to include in your DTI
Yeah.
every month. And so if we can reduce that to $50, well, that means that you just saved $200 a month of your income, which is now available to go towards this mortgage payment.
Absolutely.
Put it in perspective. 360 payments on a mortgage,
Yep.
right? You save $200 a month. Let's do some math there. 200 times 360. That's $72,000 worth of buying power. That can absolutely be a game changer in this
Absolutely.
market.
Yeah.
So if you want to buy a $400,000 house, but you're walking around with, $1,000 in credit card payments, well, you're losing a ton of money.
Yeah.
$300,000.
And I mean, that could be the difference.
Mm-hmm.
I mean, David, that's literally, that could be the difference between qualify. For some people, it can be the difference between qualifying at all versus qualifying, or it could be the difference between you qualifying for 350 versus 400 as an example, right?
Yeah.
Depends
And ob-
on.
and obviously there's some, variations of that. It's not like,
Absolutely.
okay, I save $1,000, I can go and afford a $900,000 house on a,
Yeah.
$60,000 salary. It just doesn't work like that.
Yeah.
But the thing is, you want to eliminate as much of that extra debt as possible.
Yeah.
Now, obviously, there's no such thing, and I want to kind of squash this myth, and again, extenuating circumstances. There are some people, some things out there available to help those with no down payment, but there is no such thing as I can go to this person, not have any money, and get keys to a brand new house. Even
No, are you kidding me?
right, even with down payment assistance programs, and I don't want to dive
Right.
too deep into this, but I
Yeah.
want people to be aware. You're going to have to come to the table with something. Got to get
Yeah.
some skin in the game, even if
Yeah.
it's $500, $1,000 for closing costs and this and
Yeah.
that. There's lots of rebates and incentives that people can do, but you want to have money. You want to have some savings, because I promise you this: a rainy day fund never hurt anybody. And you want to. The way that I present it to people is like this: if you want to buy a home and you're prepared to take that leap, you are about to go and get with your loan officer. Consider them like your attorney, right?
Absolutely.
You're the
Yeah.
defendant, he's your attorney.
That's
Y'all are about to
right.
present this case in front of the
To the
judge, who is your
judge.
underwriter,
Who's the underwriter? That's exactly
right?
right. Yeah.
Yeah, and the underwriter's job, unfortunately, in these cases, is to tell you no. But if you and your lawyer get together and you present a case to these guys that is just, beyond a shadow of a doubt, we can
Yeah.
trust him, then they have no choice but to say yes, we can approve you.
Absolutely.
So that's where you got money in the bank, even if it ain't a huge amount. You
Yeah.
got some money. You're showing a habit of being able to save, very responsible. You got a little nest egg just in case something happens after you do get this home. You're going to be able to float yourself. You
Yeah.
have very low debt, so you're not risky in that arena, which means your score is good. You know, so you want to take that approach. Make sure that you are absolutely financially stable.
Yeah. And the other thing about having funds available, or funds in the bank, or funds in a savings account, an IRA, an investment, whatever you want to call it, okay? Any of those things. Okay, so for the mortgage side, we look at that. That is a plus for you. Now, whether you use that money or not, we're gonna, well, maybe next show we'll talk about a little bit, go a little bit more into some of the DPA programs,
Hmm.
or with how that works. But what I did want to say, as far as down payment assistance goes, okay, even if you're getting that, when you have money, right, like you're talking about having money available, even if you don't use it, okay, that is a plus for an underwriter. That is a warm and fuzzy for an underwriter to see that you've got money saved. All right. In certain situations, that might be something that we need on the mortgage side to get someone approved as what we call a compensating factor. All right. So
Hmm.
savings, IRA, any type of investment accounts that you've got, that is a compensating factor. And a lot of times we need those compensating factors in order to make that underwriter feel really good, right?
Hmm. It's
So,
it's like it's like when people start to drown in credit card debt.
uh-huh.
And I've gotten this over the years. So like, well, should I do a consolidation loan?
Mm,
Which, don't get me wrong, that is the best way to do it, to consolidate credit card debt.
right,
You can get a good consolidation loan. Here's the problem: in order to qualify for that with a reasonable rate, you got to have A1 credit.
right.
And most people drowning in credit card debt don't have A1 credit.
Yeah,
So it's like, uh, they they'll give it to you when you don't really need it.
right. Exactly. Yeah.
So, but that's when you're approved, when you
Yeah,
don't really need it. If
right.
you're drowning, well, let's go back to credit 101. That's
Yeah,
risk. You don't
yeah,
have the means to attack this debt already, and now you're going to somebody else saying, "Hey, help me out." They don't want to help you out.
yeah,
They want you to be worthy of it, which
yeah.
means that you are showing financial responsibility.
And you had talked about utilization, which is that's a
Hmm.
huge percentage of your credit score. The other issue with high utilization, let's take this back to me being the attorney and presenting the case to the judge, right? The
Sure.
underwriter. The underwriter looks at high utilization as you cannot manage money.
Yeah.
That's period. That's it. End of story. That's how they look at it. Whether it's true or not, that's how underwriters look at it when your cards are maxed out and you've got, especially if you got multiple cards that are maxed out, right? It is one of the biggest issues that underwriters have with mortgage loans is when they see a person who has several maxed out credit cards. All right. So
It looks like you're living off of them.
yes, you're living off, you can't manage your money and you're just living off
Even
credit
if
cards.
it's not the case.
No.
And yeah, it's you got to knock it out. You just got to do it.
Yep. So what about the percentage? So give people a percentage. So when it comes to utilization, because again, I know this is a huge part. So out of the big pie, our 100% pie, what percentage is that utilization piece?
30%. Okay. I thought you were talking about the credit pie. 30% of your credit score is built on utilization of debt.
Right. Yeah.
That's factor. Other 35 is payment history. But when you're talking about utilizing your credit cards, we've all heard 30%.
Yep.
Right. And the way that I break this down is if you have 30% used, that means simple math, you've got 70% available.
Yep.
More than double your debt. Right.
Yep.
So if you and 30% is okay. That's where it starts to move the needle. But think about this. Who else? I mean, the algorithm works at 30%. It starts to move the needle a little bit. But where do you see that information coming from? Usually it's credit card companies saying, hey, keep your credit cards under 30%. Because if you carry 30% over, I'm making interest.
Right. Yeah. Yeah.
So here's the thing. If 30% starts to move the credit needle, if you go down to 20%, that means you have 80% available, 4 times your debt available.
Yep.
And it'll move even bigger. You get down to 15, 10, 5%, 1%, 0. You have 100% available credit. You are no risk, right? So, people talk about, and real quick, a funny story. I had a client many years ago, looked at his credit report and I asked him, I said, man, looks like you just got this $20,000 credit card. And he was like, oh yeah, I secured it. Okay, so you put $20,000 down for this credit card? I sure did. Why is it maxed out? Well, man, I was told that I need to, max it out and let these credit card companies gain interest off of me, and that'll help my credit. I was like, nah. It looks like you went and took out a $20,000 credit card and then instantly needed to use all of it.
Oh my gosh.
And it kind of blew his mind. I said, you're just showing maxed out. You need to pay that sucker off. He said, hold on, David, put me on hold. About 2 minutes later, all right. I transferred the money. Must be nice, right? But
That's
yeah, he paid it off, and I kind of went into how to manage those credit cards, and there is nothing wrong with having a $0 balance. I don't know why people say you must keep a balance.
Right.
Why?
Well, I think people have said that because they feel like if there's no balance, I guess if you can kind of show a history of having a balance and paying it down is different than just having a card and you've like never used it.
So my first credit card several years ago was a Capital One, right? Yep. When I got into this industry, I didn't know anything about credit. My first credit card out of high school, so, they sent it to me, told me to go and get things. I went and got things. Then they asked for money. I'm like, what's money? So I had little Capital One charge off, right? And so, a couple of years go by, get in this industry. One of my buddies puts me on as an authorized user on his. Needed to reestablish. So that happens. My score jumps up. I was able to get my own Capital One credit card, even with that Capital One charge off. They're pretty forgiving. And they gave me a $300 limit.
Right.
Now, Capital One, it's pretty standard practice. If you make 5 on-time payments, they increase your limit. So what I was doing with this little Capital One credit card was I was using it for every single thing that I could. And I was making multiple payments a month, 2-3 payments a week. And before you know it, I do this month after month after month. Now it comes time for them to increase my limit.
Yeah.
Well, before I just said, yes, I accept, I called them up and I was like, hey, I need a bigger limit than what y'all are trying to give me. You're trying to go from 300 to 500. And one of the questions that they ask is, how much do you use on credit cards? And I only had one. It had a $300 limit and I put like $2,500, $3,000 a month.
Right.
Because I was using it and paying it and using it and paying it. So now I could show the need. Right now, I show that, hey, you know what? He's using it, never late, makes multiple payments. He doesn't show a high balance over his utilization, his limit. And so they were like, yeah, we'll give them $3,000 limit.
Yeah.
So from 300 to 3,000.
Yep.
And so, it can happen.
Yep.
And using your credit cards like that, we've got to understand that credit cards are a secondary form of payment. This is not extra money.
Right.
If
And it
it's
has to
not,
be paid back.
yeah, yeah. So people, we this is something that we've said in credit repair for quite a while. Using credit cards is OPM, right? Other people's money,
Absolutely.
and it can be just as addictive as OPM,
Mm.
if you know what I mean. And get
Yeah.
very addicted.
No.
You don't feel it. You don't
Yeah.
feel it until the end
No.
of the month comes and they say, "Hey, time to pay up," and you're like,
Yep.
"Well, I had every intention of paying this thing off, but I can only do a minimum payment,
Yeah.
and now you
And
can't
that's what
use
they
it no
want.
more." Right?
They want you make the minimum.
Yeah, at least that.
Yep.
Like I tell my clients, if it's ramen noodles and rice and beans this month, it's ramen noodles, rice and beans. You pay them
Absolutely.
people.
Yeah. Yeah.
So,
I wanted to talk to you about this real quick. So you had mentioned the guy with the secure credit card, right? The 20,000. So I want
mhm.
people to know, like, a secure credit card works the same way, right?
Mhm.
Even if it's your money, it reports. Like, the whole reason people even get secure credit cards typically is because they can't get a regular credit card, right? For whatever reason, they can't
Mhm.
get a regular one. So this is a way to establish credit, is by getting a secure credit card.
Yeah,
Um,
and to be very clear on that, that money that you give them
yeah,
is not what you're spending on a monthly basis. That money that you gave them, that is a penalty for having bad credit. Some
exactly.
some
That's
companies
exactly
will give you that money back after you show good usage.
right.
But if you screw it up and you give them $300 to secure a card and you use it for 4, 5, 6 months and then you max it out and say, oh no, I'm
Yeah.
good, you just keep my deposit. Well, they're going to keep it anyways, but you still
Absolutely.
owe that $300
Yeah.
because that was their money.
Yeah.
That was their money that you were using. Your
Yeah.
$300 deposit does not go towards that balance. You have the opportunity to get that money back if you play the game right.
That is huge. But yeah, I want people to understand that a secured credit card, while people just think it's not a big deal if they get a secure credit card and they go max it out, like I said, it's the same thing. Whether it's
Yeah,
secure credit card or a regular credit card, you go max it out. Guess what? It's going to report as you maxed it out. It doesn't matter that you
absolutely.
gave them 500 or whatever you gave them to secure the card to be able to start using it and establishing credit. It gets reported the exact same way,
Yeah. And
secured or not.
And if you got $20,000 to go and secure a credit card,
Yes.
please don't do it. Please
That's,
don't do it.
no, I don't know.
Credit
That's
cards
interesting.
it is not about the limit that you have available.
Yep.
It is not.
No.
It is all percentages.
Yep.
If I have a $10 limit, I can have 1% of $10,
Yep.
right? So people get, well, I only got $3,500. It doesn't matter. How
Doesn't
are
matter.
you using it? How are
Yeah.
you managing
Yeah.
that percentage?
Yeah.
So, do not throw $20,000 at a secure credit card, please.
Yeah.
I promise you, I can show you better ways to spend it.
No doubt. Yeah. And so that is key. I want to make sure everybody caught that. So if you have a $300 limit and you spend 150, you're 50% max. Like,
Yes.
the algorithm doesn't have a, oh well, it's only $300. It doesn't matter
Nope.
if it's $300 or 3,000 or 30,000. Right? You got a $30,000 line of credit and you're using 15,000 of it. You're 50% max. Right?
Absolutely.
The algorithm doesn't differentiate between the amount. It's
Yeah.
simply utilization. So don't think that just because you have a small limit, you're just limited to what you should be using it for. So,
Yeah, for
but the
sure.
key there is that the algorithm doesn't look at it any differently, whether it's 300 or 30,000, and you're max or you're halfway, halfway to halfway utilization, or it just doesn't matter what the amount is. It looks the same.
Yeah. And that is something we need to drive home because
Yeah.
it credit and debt, they work together, but they are two separate paths,
Yeah.
right? Being debt free is probably one of the greatest feelings in the world.
Hmm.
We will probably never know it, but
Yeah.
that's okay because we also know how to manage.
That's the
Um,
key.
yeah, and so don't look at your don't look at your credit report and this is coming from experience. Most people I speak to, they look at their credit report and they're like, they see two numbers. They see their credit score and they're like, oh man, that's horrible. And
Yeah.
then they look at their debt and like, ah man, that's a lot of money. That's even worse.
Yeah.
And it's easy to correlate. Well, if I attack all that money, my score will go up. That's not how it works.
Yeah.
It's not the dollar amount that impacts your score.
Right.
What's impacting you is the fact that it had to go to that negative status in the first place for like
Yep.
lates or charge-offs or collections,
Yep.
or the percentage of debt that you're using on your good open accounts.
Yeah.
Percentage. Don't
Yep.
worry about dollar amounts. A $0 collection that happened today has like you pay off the wrong collection and it updates and now it's got a new date of activity. It is a brand new collection for $0. It
Right.
has a much bigger impact than that, $40,000 repossession you had 3 years ago.
Yep. Yeah.
So
Good stuff, man. So,
mhm.
so good. So man, this was great. It's like that. We're 30 minutes in, man. We're getting to the end of our first, first gosh, we did 30 minutes here today. But for you guys, we will be on 6 to 7 p.m. And David and I are going to do this the first and the third Monday of each month. Unless something crazy comes up, we'll be on here answering questions. So make sure you guys share, tune in. All right, if you got questions, credit questions, mortgage questions, real estate questions, home insurance questions, all right, we're going to start adding some more people in to our discussion to be able to help people navigate this environment that we're in right now. But I think most people know, David, you you are one of the most important pieces here, because a lot of people are in a situation where they want to own, but they need a little bit of assistance. And while there's certain things that I can educate people to do,
Mhm.
there's a lot of people that are going to need a little bit more specialization in being able to get themselves ready for home ownership. And
And
the beauty of what you guys do there, I say this all the time. Listen, you and I are primarily in the mortgage space, right? That's kind of what we specialize in. But what you're sharing with people will help them in literally every aspect of their life. I'm gonna let you finish this out. We're gonna talk about next week. I'm gonna have you talk about this because we'll talk another hour if we start getting into
right.
this. But I know you are starting to do some credit education in high schools, right?
Yeah.
Um, we're gonna talk about that next week.
Yes.
But this is huge. I'm gonna let you finish off. But yeah, we're gonna hopefully we get to start to bring you in that concept of educating our younger generation about credit. Because my parents didn't tell me anything about credit. I had a great parent childhood. No knock on my parents, but I didn't know anything about credit. I had to learn on my own, and I learned
Well,
the hard way.
well,
But
they
I'm
don't teach they don't teach it in school.
no, yep,
Not
it
at
wouldn't.
any level of education.
No,
There's not a book you can pick up to learn.
nope,
There's not a blog that you can follow yet.
yeah,
I'm working on it. There's just there is so much content out there that unfortunately is very low level and it's very misleading in some
yeah,
regards. I mean, don't get me wrong, they're good people, good intentions. They
yep,
just don't understand. And yeah, I'm super excited about that. We'll touch on it. But
yes,
one thing that I want to leave everybody with is um, one of the reasons James and I wanted to do this here is because we feel the need to make an impact,
yep,
whether you use us or not.
yes,
If and we don't need the kudos, but this is going to be self-fulfilling for us too.
for sure. Yeah,
But at the same time, we want you to understand that you have some advocates out there, you have some seasoned professionals in this industry that are truly here to help you.
yeah,
Um, you know, whether or not we make a penny off a transaction is beside the point. We
yes,
want to give you the information.
yep,
There is not one situation that I haven't come across. I mean, I don't see anything new anymore on
yeah,
credit.
yeah,
I've been doing it too long.
yeah,
That being said, there are unique individual situations that,
absolutely.
as long as you're serious about doing it, we will find the answer. It's
Yep,
never fun. It's never easy, but if with a little bit of hard work and determination, I can put you on a game plan, or we can come up with some solution for it. So,
Yep.
as James said, reach out, send us your questions, hit us up individually if you need something. And next time we hop on this, we'll be sure to address some of those.
Yeah. So reach out to David, guys. We put his information back up there on the screen. Reach out to him with any questions. Send us a DM. Call us. David's phone number and email address is there. You can DM me, James J, and you can also check us out on TexasMortgageBossTV.com. That is a YouTube channel. We're live over there. So we'll be back in a couple of weeks, David. Man, I appreciate you, brother. This is awesome. And just to piggyback again, you're 100% right, man. We just enjoy doing this. We know it's going to serve and help some people. Whether we make money, it's irrelevant. That's not why we're doing it. We could be doing anything. It's 7 o'clock at night, right, on a Monday night. We don't have to do this. We literally are doing it because we just genuinely, should I say, enjoy helping people. That's really what this comes down to. And people need help in this market, right? It's a very challenging time right now. A lot of stuff going on, a lot of negative stuff in the news, just so much stuff going on. But listen, homeownership is still one of those things that people want. And David and I are going to do whatever we can to help people. So thank you, David. I appreciate you. We will see you guys in a couple of weeks. Hey, if you still have questions, send us a DM, call us, and we'll get your answers. All right. Have a great evening, guys. We'll see you soon. Peace.
Thank you.